Good morning, good evening, good afternoon. Greetings from wherever you are around the world. I wanted to make a weekly breakdown, not necessarily a review, but what I'm looking to see the week ahead. But before I did that, just wanted to quickly remind everybody that might have been following that I've been breaking down the dollar index week after week after week, and my objective has always been on point so far. I haven't really been that off when it comes to the dollar index, which of course allows us to predict better where we are expecting the euro dollar, pound dollar, and indices to move to. The only issues are at the moment the indices, the three averages, have been a bit out of sync with the dollar because of interest rates and every other fundamental reason. So I haven't been heavily looking at the indices at the moment, and I've been purely focused on the dollar index. Yes, I'm also aware that I haven't really made an update video on the funded account challenge, but I'll most likely going to be making one within this week. I'm not promising that, but I'll probably be making an update video on this soon. In any case, I just wanted to make sure that everybody else has been following the dollar index analysis to this point, and if anybody hasn't been following my weekly breakdown, I would urge them to take a look at least the previous video, if not every other video, just the previous two videos on the dollar index before we get started. So let's begin with the dollar index monthly chart. As we know, for the longest of time now, I've been looking for the higher dollar prices into this monthly sell side inefficiency, this monthly fair value gap, in the form of a sell side inefficiency, sell side imbalance, buy side inefficiency. So as usual, I did point out how we rejected from this monthly buy side imbalance, and for the first time in a long time, we did not only reject from it, like here we did reject before, we rejected again, but this time we had a deeper rejection, clearing these relative equal lows at that point. So this essentially, to me, you could call a total soup, a Judas swing, or whatever you want to call it, and now we're finally getting a displacement to the upside. I also pointed out how when we opened in the month of September, I was expecting this to act as an order block because we closed above this candlestick's high at that point. So I was looking for higher prices, and I wanted to see the consequent encroachment of this monthly CB tapped into going into the month of November. Around the middle of November, I would like to see anywhere inside of this sell side imbalance to be the high of the year, essentially, because this was December 2022 and this is January, so I would like to see this to be the high of year before we can look for any lower prices from there, or even higher prices. But I expect this to hold off in the month of, I want this high to be November. So, but that's obviously for other macro analysis and every other review that I've been making this whole time. So the target short term is going into these relative equal highs with these two candles from March and December, which is the entry point for the monthly sell side imbalance. So going down to the weekly chart, we also used the weekly, specifically remembering at this point where we got a massive fall into this weekly sell side inefficiency and an immediate rejection from there, and the way we moved so quickly away from it, we didn't even touch the consequent encroachment or all these other levels inside of this week, which was I think the last week of August, and we just propelled higher from there. If you do remember this past the past week, I specifically mentioned that we might have a bearish week. We might have a bearish week this past week, but we didn't, and we did in fact respect the levels I was looking at. Again, if you guys remembered, I was looking at this daily BC. I was also looking at this fair value gap, this BPR, this balance price range, and I was also looking at the consequent encroachment of that tail. But I also mentioned in the same video that we may not even be able to tap into this because this might be a little too overextended, and I also mentioned how this might end up being a breakaway gap, a fair value gap that might never have to be tested again, which we are currently doing. We just rejected from this buy side imbalance after tapping the consequent encroachment, which is this point, the halfway mark of the buy side imbalance. And this was, I believe, this was a Monday, and left from there. So right now we have finally tapped into the volume imbalance that we've been eyeing for the longest of time now, and my next target, of course, is the buy side liquidity that's residing over there at the 105.883 level. So this is my target going into the week. But now the question is, how do we get to that target? Well, to be honest, I get the feeling that we might use this volume imbalance, which was a new week opening gap. No, actually it was a new day opening gap in March. We might use it as support to see higher prices. We may not even have to trade lower, but if we do trade lower, the level that I'm looking at is this daily BC. Of course, as I've always mentioned, I like putting the time frame before the PDRA so I know where it's actually coming from. So that's the daily BC. I'm going to erase these because these were all intraday and intra-week. So I'm just going to remove them for now, but I would be looking at these two possibilities: a continuation to the upside or a bounce off from this PDRA on the daily chart. Then we finally see higher prices from there. Of course, if we show willingness to break through these highs, I'll be looking at this high next, but this would be essentially terminus short term. I say this because at that point we have finally entered the monthly sell side inefficiency, so that's why I'm paying close attention to that. So as I said already, I'm paying attention to this inefficiency. This is a 9-hour chart. I'm looking to see how we trade into this and higher prices from there. And that's actually my trade idea for the week. I do not have anything else besides that. I'll be obviously paying attention to the consequent encroachment, but I'm not even going to wait for that. I'll be waiting for the entry of this BC for higher prices. So that's all I have on the dollar index. The next interesting pair, or in this case metal or commodity, that I'll be looking at is gold. So starting off with the weekly chart, I don't like touching gold, specifically because it's heavily manipulated. Of course, we just saw now that the dollar has been rallying higher and higher and higher the last 9 weeks or so, but the same is not happening with gold against the dollar. We're supposed to be seeing lower and lower and lower prices, but of course we can see that we got 2 bullish weeks, 1 bearish week, and yet another bullish week last week. This is the same with the indices at the moment, which is also why I said I didn't like the fact that we're bearish and now suddenly bullish and now trying to be bearish again, even though the drawing liquidity was so clear. And if it was following the dollar index, we would have tapped into this drawn liquidity a while ago. Of course, same with the indices: bearish, 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 bullish, bullish, bearish, bearish. And I also pointed out the last time that it's basically following the treasury bonds, because I took a look at the treasury bonds, and I noticed that we did have 3-4 bearish weeks and then 2 random, in quotes, random bullish weeks to accumulate more orders. And of course the last 2 weeks has been bearish as well. This is true for the 30-year as well. I did not expect to see a rally to the upside on the 30-year, to be honest, without tapping into this by setting efficiency, because it was next to this order block. So I would have liked to see us tap into that, but if we don't tap into it, then that's okay as well, because I would again just take it as a breakaway gap, which would show us more willingness to go higher, and this would not become a swing low, 2 lower highs, I mean 2 higher lows on these 2 candles. So we can expect an expansion to the upside after properly closing higher above this swing high, this buy side liquidity. And of course we have that buy side liquidity residing higher there on the monthly. So yeah, I wanted to point that out before starting off with the gold analysis, how heavily manipulated the market is and why I don't really trade it, but I might be looking for opportunities this week from a swing trade perspective. I'm not going to be looking for intraday positions, and I'll probably just hold the trade throughout the week. So as I've already mentioned, I'm looking for higher dollars, so I'll be looking for lower gold, and in that case this would be my target or drawing liquidity. And then if we can show willingness to break through this, I'll be looking at this level. Why would I be specifically looking at this level? Because we essentially have no tail, and for me, with what I've learned from Finesse, which I'm going to link again in the description, he has shown me or taught me the importance or significance of wickless or tailless candle. So this is a strong form of liquidity for me personally. So I'll be looking at these 2 targets as my drawing liquidity, this sell side and this, the low of this candle. Moving on to a lower time frame. I'll just be looking for PDRAs. Since I'm looking for lower prices, I'll be looking for premium arrays to sell from. And the only one I was looking at, the only one that I saw or noticed, is actually on the daily chart, which shows itself here on the 30-day chart. So let me just quickly highlight this. This is the 3-day inversion fair value gap. I'm just going to highlight that because from what I'm seeing, we did not close above this inversion fair value gap, even though we traded higher than it. So my analysis for the week would be saying that we've already rejected from this inversion, this 3-day inversion fair value gap, and I don't see a reason for us to go higher than this. So my invalidation point would be essentially this swing high residing here, which in other words would be my stop loss, and of course my targets being this sell side liquidity and this sell side liquidity. So I did take a look at it earlier briefly on the daily chart at current price. I did not bother going back in time. I did not bother looking for extra PDRAs to support my idea, and I'm only looking at one, which is not the best trade idea, but for me I find that I find it possible to work out. So that being my validation point, what would be my entry then? My entry from what I'm looking at right now, we are currently trading inside of a PDRA, which is I believe a weekly inversion. Let me confirm where this inversion fair value gap is coming from. If it isn't, then it's probably a lower time frame inversion fair value gap, but we can also see it on the daily chart. From this candle's high to this candle's low, there's an inversion fair value gap, and let me actually make sure it's also it's from a 9-hour chart. So the reason I was looking at this inversion, this PDRA, even if you don't want to look at this inversion, I was looking at it because it's a stronger form of a PDRA when there is two of them. There's a BC and a CB sitting right next to each other. A stronger form that we should not have to close the CB in this case before falling off. We should not have to fill it up completely. So my trade idea is essentially looking at these equal highs, these relative equal highs, buy side liquidity and this buy side liquidity. I know it's not exactly the same level, but I'm looking at these relative equal highs, and I would like to see us trade the same way that I want to see us trade lower on the dollar, as I highlighted earlier. I would like to see us trade lower into this inefficiency before moving higher. It's the same way that I would like to see us trade higher on the dollar, on gold, before moving lower. So essentially a turtle soup, taking out this buy side liquidity, and as soon as we take out this buy side liquidity, I would actually set my orders at this buy side liquidity. So as soon as we take it out, I'll be aiming for lower prices. And as I said already, my invalidation point is that swing high. My targets are the swing low and the sell side liquidity residing there. So I'll be looking for those levels, and if we can show willingness to go through this, then I would finally be looking for this level, which is the tailless weekly candle, I believe. So that's my trade idea for the week. And I wanted to also, I'll probably link his YouTube channel in the description as well, but it's Romeo. He is the master of turtle soups, and I remember him saying something along the lines of a turtle soup that happens in a high time frame PDRA is one of the strongest turtle soups you could find. So I'm looking at the fact that we're in a high time frame PDRA right now, and if we can show willingness to break through this, and even if you don't want to grab the turtle soup exactly at the top, you can look for a 5 minutes market structure shift for an entry after taking out this swing high. So of course, when you go to a lower time frame, you'll essentially see the same things. You most likely, if you look real hard, find an entry. Of course, we use this other block wick to tail, body, this other box tail wick to body already before, and we might trade a little higher this time, probably to the main threshold, not consequent encroachment, since it's an order block, or any of these PDRAs from a lower time frame. But my trade idea essentially revolves around taking out this high, taking out last week's high, into still inside of the buy side imbalance or sell side imbalance, depending on how you're looking at it, because we had a buy side imbalance residing there and a sell side imbalance residing this side on a high time frame, on a 9-hour chart. So we would ride this all the way down. I will only be taking my first partial when we take out last week's low, and then of course my second partial at the sell side liquidity, which is at this point, then the lower one, which obviously are a lot more visible on the high time frame. But yeah, I'll be taking out my first partial at this low, then this low, the final target here. So that's my trade idea for gold. My stop loss is so wide because it's heavily manipulated, and I'm expecting anything from this market, from this specific market. Yeah, that's all I have for gold. I was also requested to make a video on euro, and it was actually at the right time, so this video might actually be longer than expected, but I'll break it down into sections that would make it easy for people to navigate to the exact point they want to navigate to, and I'll do a complete breakdown on euro. As I've already mentioned on my how to do a complete breakdown, a complete top-down analysis video, we're starting off with the interest rates. Every of these links are under the description of that video, which I will link in this video's description as well. But going into it, I specifically brought up the euro because we can see here that on the 14th of September 2023, we got an interest rate increase from 4.250% to 4.500, so 0.25 basis point increase. And as I also highlighted in that video, whenever there's an interest rate increase, it does not necessarily mean that the currency suddenly starts gaining strength. And from my experience, from a bit of backtesting, I've realized that it may just mean that this is the point where they do their manipulation into a high time frame PD array, a very high time frame PD array from the daily and upwards, before moving to the direction that it's supposed to move to. So in this case, we can see that the European interest rate has increased, and from that video I did say you should look to see weaker currencies interest rates, so that the interest rate differential would make a high probability trade possible. And I saw, well, of course, the arrows in green are the ones that will show you which interest rates are lower. And obviously, looking at all of them, like Poland, we don't find these currencies on most brokers. Of course, the broker that I trade with, I do find these exotic currencies. Even the Chinese yuan and the Indonesian currencies and all of them. I actually get to trade all of this, but that's not the point in this case, because the point here is to find something that we can all trade, which we can obviously highlight the Japanese yen. So finding a trade idea from EURGBP would be high probability from an interest rate perspective, right? Just by matching a strong and a weak interest rate. So already at the back of our heads, we planning to buy EURGBP. Of course, the idea may not be there right now, but that should be something we have at the back of our heads. And to be completely transparent and honest with you all, I have not checked the EURGBP charts in a very long time. I do not know what it looks like at the moment, and I will be doing this completely candid with you all. So from here, we move on to barcharts.com. Of course, as usual, we get the chart that we want, which we've already mentioned was EURGBP Forex. After it loads up, of course I prefer the candlestick chart. I've also mentioned how I only look for the COT data. I'm doing this completely live with you all so I can embed it in your mind on how I do a complete breakdown. So of course I leave the common specs and remove the large and small. And normally this is the point I would enlarge the actual COT data. At this point we would have the data here, but this is probably one of those. I have never actually bothered checking why some currency pairs have the COT data beneath and why others don't. I thought some of them were just so negative that it's not even plotted, but maybe it's just general interest also. Sometimes when you do type the euro on its own and you type JPY on its own, you would find what you're looking for, but looking for specific pairs is can be problematic sometimes, not all the times. Like in this case, we can clearly see that at this point we can clearly see euro. Even without plotting the 50% mark, we can clearly see that we are basically very cheap right now, because that's the zero level residing there, and we are in the negatives right now. So in a sense, you could call it, you could say that we are oversold right now and might be looking for a push higher soon. It does not mean at the moment we should be looking to buy without looking for any high time frame PDRAs or any reason to be buying in the first place, because we could fall a little more before buying up. The same way we can look at the Japanese yen on its own. I actually don't know what the Japanese yen index is by heart, but it doesn't matter much because we've already seen the euro, which is the one we're most interested in. That's the one the interest rates did change in the week. And yeah, but I do have to add something, which is that this is the 6 months chart of the euro, and looking at the time, looking at how, let's actually go to the yearly. Looking at how much time has passed, we can see that we've always stayed below the zero mark, and that might also mean that you should rather just split this into half, split the data you have on the screen right now into half, and see fractally, are we in a discount or a premium? And fractally, from this high, from the zero mark to the negative 250,000, we are technically in a discount. And if we're not sure of that, I can also take a screenshot and edit it on TradingView. Pasting the screenshot in on TradingView, we can just split this area into half. Of course, I have my previous colors, my terrible color for white background, but I think it is visible. I think it is visible to see where this blue line is. Following it, we can see that we're almost there. We're almost at equilibrium. If we're going to take this range from this high to this low, to minus 250 and below, we are almost at the 50% where this blue line is. So we're still technically in discount, but we are heading to equilibrium soon. So that's the COT data. Now let's move on to the actual charts, going to the monthly of EURGBP. Okay, oh yeah, I remember this chart now. So yeah, I remember looking at this chart some time ago. I was paying attention to this volume imbalance residing there and the sell side inefficiency and the consequent encroachment of it. So it looks like we're still trading higher and higher, but it also looks like 3 months ago we dipped down for an immediate rebalance for higher prices. So I would definitely be supporting the higher prices, especially now looking with the interest rates combined into it. I'll be looking for this as my target. Even though we've tapped into this sell side inefficiency, I'll be expecting us to go as high as this consequent encroachment. So let's move down to the weekly chart. It's been a bit of a chop, and this immediate rebalance that happened here was actually tapped into a weekly buy side imbalance and perfectly rejected from it. And now we've been consolidating, we've been in a massive chop for some time. Because we immediately rejected from this PDRA with this high time frame PDRA, I don't believe or think that we would trade below this anymore. So if you want to call it an invalidation point, I would say this would be my stop loss. This would be my invalidation point. Of course, the consequent encroachment being my first target, and a complete closure of the monthly sell side inefficiency being my final target. Going down to the 9-day chart, we have the same structure, the same story. Inefficiency tapped into, rejection to the upside. The same has been happening. High time frame PDRAs have been supporting higher prices. We've got this other block, I believe, from a daily, if I'm not mistaken. Yep, from a daily chart with a fair value gap, and still holding up for higher prices. At this point, we tried to trade lower, but we've been sideways ever since. But we tried to trade lower on Thursday, and Friday just started the rejection. Normally, I'd like to see a discounted price before we shoot higher. So I would have loved to see us open up next week, take out one of these sell side liquidities, preferably this one from Monday, like so, and then push higher. But in this instance, I feel like we've already done enough damage, and we may not have to move lower anymore, because we've already swept this swing low twice, once at this point and the second time here. We've already taken out the swing low, and we've supported the high time frame PDRA, so there's no reason to return back to it in my mind. So I would be expecting us to use a bearish PDRA. Take for example this sell side inefficiency. This sell side imbalance, not inefficiency. I'll be looking to see if we can use that as an inversion fair value gap. Of course, at the moment it isn't, but I'd like to see how we trade above it, if we can use it as support for higher prices. And that would also mean I would like to see this sell side imbalance fail to hold. I'd like to see a body closure above this sell side imbalance. Of course, I'll be paying attention to this other block, but I would like to see us close higher than it for higher prices. Of course, there's still a possibility of us moving lower, but I already said this is my invalidation point. So we'll be looking to see how we trade on the euro. Of course, I guess that's all I really have on euro. On euro dollar, it's a different story because of the dollar index. I'm expecting lower prices. We just tapped into this sell side liquidity. We swept it by a pip. We still have this one as our main target, as I also have higher prices as our target on the dollar index. I have lower prices as a target on euro USD. The same goes for GBPUSD. We still have this sell side liquidity that hasn't been swept. That's the only target that I have on GBP. Euro, with other currency pairs that I'm looking at personally, I'm looking at Euro GBP. And I know I did just mention now that I'm looking for higher prices on the euro, but I'm in a long-term position, not too long-term, a swing trade for the whole month or for 3 weeks to take Euro GBP lower. If anybody knows what these mean, Q1, Q2, Q3, Q4, I would love to hear an explanation in the comment. If anyone knows anything about true month openings and things like that, I would like to get an explanation in the comments. But I'll give a clue, and I will leave a link in the description because I got this from Day. And yeah, I don't want to make the video any longer than it is already, but that's all I have for now. Good luck and good trading.